Hello, everybody, and welcome along to this afternoon's webinar. My name is Calvin, and I will be your host and presenter today. And behind the scenes, even, we have Duncan, who will be available on hand to answer any questions that you may have throughout the session today. So with that being said, let's get stuck into it. We'll start off with the contents of today's session. So we're going to look at setting up and assigning a pension scheme. So we're going to look at how to set that pension scheme up in Sage 50 Payroll and then manually assign the scheme to your employees. Now we are going to look at this on a manual basis as we do have a separate session for any pension module users. So we have got a recording of that session available that you can get through the Help Center as well. We're then going to move into the opting in and opting out requests. So again, how to manually process any opt-in or opt-out requests. And then finally, we're going to look at calculations. So how is a pension calculated? It's very important to know how a pension is calculated. It is also extremely useful whenever troubleshooting any kind of issues with pensions. Then we'll finish off with some further support, and any remaining time we'll get through any leftover questions. So without further ado, let's get started. So setting up and assigning a pension scheme. So the pension scheme settings are where you would go ahead and set up those pension schemes. So the settings of this pension scheme are going to determine as well how the pension will be calculated, which of course will become very important later in the session. So it'll be good to take note. One thing I will add at this stage is all the details that you need in order to take each box and fill these settings up or fill these settings in. That can be found with your pension provider. So they are the ones that will determine these settings. You just then have to go and transfer them into Payroll program in this little section. So always check with your pension provider if you're unsure of which setting to choose. Okay. Next will be about assigning a pension scheme. So once you've set that up, and don't worry, we'll be demoing this in shortly, but once you've set that pension scheme up, you will need to then assign that pension scheme to employees. And to do this, you'll firstly need to assess your employees. So this will determine if they are eligible, non-eligible, or entitled. Now, any eligible employees, based on the automatic enrollment rules of 2016, must be enrolled. So if you assess your employees and they are determined to be eligible, then they must be enrolled. Now, the eligibility criteria and what you would assess with can be found on the Pension Regulator website, but ultimately it goes off their age and their wage. So you can see in the legislation settings that we have a little screenshot of there. There's an automatic enrollment tab, which just lets you know. So you've got your earnings trigger in the middle. We'll get to the thresholds when it comes to calculation. So again, keep that in mind. But the earnings trigger is what you'll be using to assess them, as well as their age. So you've got your earliest assessment age, and then you've got your eligibility age. Okay, so just keep that in mind. But again, you can find more details on that on the Pension Regulator's website, as they are the ones that determine those. Once you've done that, so you've assessed your employees and you've set up your pension scheme, you'll then need to go and add that scheme to the employee. So that's assigning that scheme to the employees. Now we're going to look at it from a manual perspective, which will be manually adding it into the employee record. So again, we've got a screenshot there. But if you are a pension module user, you can do this directly through the pension assessment. So the module is designed to assess and assign a scheme automatically for you, hence its benefit. Speaking of the module, we're not going to touch on it in the demo as much, but I do have a screenshot here just to show you what it looks like. So when you go through and assess your employees, you'll see there we've highlighted an employee who has a little black flag because they were new added. And you'll see they've got a type as eligible, therefore their status is auto-enrolled. That has assigned the pension scheme for you. So what we'll do now is let me jump into the program and we'll go through and we'll demonstrate setting up a pension scheme, and then we'll assign it to an employee as well. So here we are in the program itself, and we'll have a look first at the pension scheme settings. We're going to go ahead and set up our scheme. To do this, we need to click on company in the bottom left. So you can see we're already there, but if you click on company in the bottom left there, then we will go to pension schemes. Once you click on that, you'll have this little window appear here. Now, by default, you will have 10 pension schemes set up. Now, these are just standard ones. All you need to do is highlight a chosen one and click edit. So we already have one set up. So let's go ahead and have a look at those settings. click edit. Just click OK that message. And first, you've got 4 tabs at the top. So we're going to start with the details tab. This is where you can give your pension scheme a description. It can be whatever you want it to be. Call it how you like on that regard. The next is going to be the type of scheme. So this is a drop down, and then you would just simply select the type of scheme that you have. Now again, just a reminder that details of which need to be obtained from your pension provider. They'll be able to tell you what kind of scheme it is, what type of scheme it is, as well as some of the other settings. We'll stick with other for this example. You then have 2 tick boxes here. So we can ignore the SCON number for now. Qualifying scheme and using qualifying earnings for pensionable pay. Now, when it comes to a qualifying scheme, that would determine if this scheme qualifies for automatic enrollment. So 9 times out of 10, if this is your only pension scheme, then you would be ticking this box, okay? Unless it's a private pension that you're setting up through the payroll, then it normally is ticked for that. The next one is the qualifying earnings. So this again has something to do with how the pension is calculated, which of course we will get into a bit more detail later. But the qualifying earnings is something, again, your pension provider will let you know whether or not your scheme uses qualifying earnings for pensionable pay. The final tick box to take note of this on this section, is the salary sacrifice scheme. So is your pension scheme a salary sacrifice scheme? Again, tick it if it is, leave it unticked if it's not. Then the next tab is your employee tab. So here you'll be setting up your employee rates. So you can see here we've got ours set up as a percentage, and it will be 5%. So again, you can change that to a fixed amount if you need to, or simply keep it as a percentage. Now, again, we've gone with the very minimum that you can, which is an employee of 5%, an employer of 3%. Now, on the minimums, you must have a total of 8% between the two, and your employer amount must be at least 3%. Okay, now you can have any kind of combination, but as long as those 2 criteria are hit, then you're fine to go. Now, the one other thing to take note in the employee section is this tick box at the bottom, deduct before tax. So if your pension scheme is deducted after tax, it's a simple case of unticking that. If it's deducted before tax, again, fairly simple, tick the box. Again, that's something that you'll need to confirm with your pension provider with. And the next tab to go along is the employer amount, very similar to the employee amount, except one less tick box to worry about. It's just about simply setting your contribution amount in this particular section. So percentage, 3%. You can then move into your provider tab. Now here is where you just put details of your provider. So again, you've got a little drop down for the 3 that we have. So if you're a pension module user, that is only available for these 2 particular providers at the moment. Hence why there's only those 2 in the drop down. You're with anyone else, just select other and then pop the name, your details in. The most important part though is the provider's reference. As you can see, we've left everything else blank apart from the provider's reference. And that's it. So hit the OK button, and that is your pension scheme set up. So again, quick reminder on that, everything that you choose within that section, so all those tick boxes, it's worth checking with your provider if you're not sure, because they are the ones that'll be able to tell you whether it's deducted before tax, whether it's deducted after tax, is it salary sacrifice, does it use qualifying earnings, that kind of thing. Your pension provider will be the ones who'll tell you that. We can't determine that, unfortunately. So once you've set up your scheme, it's now time to assign that scheme manually, as we're going to show you now. So we're going to highlight employee number 7 on this particular demonstration. We're going to go into their employee record. So we'll just open their employee. So we're skipping the assessment. So we know that we've assessed them. This employee has been assessed as eligible. Therefore, we need to assign a scheme. So we're going to go ahead to the pension scheme. We're going to click Manage Schemes. So it's the Pensions tab in the employee record, Manage Schemes. Then we're going to go ahead and click Add. We'll get this window here. Now all we need to do is select the scheme reference. So we have reference 1 here, so we edited the very top scheme. So we'll just highlight that. So this is where the name of that scheme can come in handy. Click OK. You'll see it's automatically filled in all of the details. Now you'll notice the join scheme and active membership achieved dates have been automatically filled in, and that's been based on what my process date is set as at the moment. Of course, if you need to change those dates, please feel free to do so, depending on when they officially joined the scheme and when their active membership was achieved. Active membership achieved, again, pension provider. And that's all there is to it, other than ticking the box to make sure it's selected as your primary scheme. Hit the OK button, and that's it. So as you can see, we now have a pension scheme in this employee record. Close it off, and then hit the Save button. Contributions will show a 0 when you first enter it because we have not yet calculated any pay for them. Therefore, no contributions have been calculated at all. So don't worry about it showing a 0 as long as you have the scheme name in the primary scheme box there. Again, save the record, click close, and you're all done. So that is setting up a pension scheme and then assigning it to your employees manually. Quick reminder, if you use the pension module, that particular step you don't need to do. The pension module does it for you. Okay, we're back to our slideshow because it's now time to move on to the next section, which is opting in and opting out requests. So any employees who've been automatically enrolled into the pension scheme can opt out of said scheme once they've been enrolled. Alternatively, if they have been judged as non-eligible, assessed as non-eligible or entitled, they have the option to opt in to a scheme. So with the opting in option, as I mentioned there, employees who are non-eligible or entitled can opt in to a pension scheme. Non-eligible employees who decide to opt in, the employer must contribute. Okay, so any employees who are assessed as non-eligible, the employer must contribute if they decide to opt into the scheme. So they would, in essence, have the exact same rules as any eligible employees. Entitled employees, however, the employer can choose to contribute for this. So if the employee has been assessed to be entitled and they decide to opt into the pension scheme, you as the employer can choose whether or not you wish to contribute to that pension. So it's completely up to you in that regard. Now, when it comes to opting out, employees who are eligible and have automatically been enrolled can opt out of the pension scheme. Now, again, the employee for this one must request this through the pension provider. So they must inform the pension provider that they wish to opt out. The pension provider will then inform you of the request, and that is when you then need to go and remove that pension scheme. So we'll be demoing the opting out. The reason we won't be demoing opting in is it's the exact same process as we just went through in terms of assigning a pension scheme. So it's an identical process. So we've already showed you. So we'll go through and demo the opt-out request on a manual basis. First, just a quick note on the pension module. Again, this can be done directly through the pension assessment if you need to. So we've shown you there, quick screenshot of what that looks like. And you've got those 3 buttons across the top. But again, quick reminder, we do actually have a separate session of all about the pension module, hence why we're looking at the manual process today. Speaking of which, let's jump back into our payroll program and I'll show you how to process those opting out requests. So we're going to stick with employee 7. So we assigned them to a scheme, we opted them in. That employee then went ahead and informed our pension provider they didn't want to be in. So they told us we need to now take them out of the scheme. So yet again, we are going to go back into the employee record. I like to do this by right-clicking and selecting Open Employee. Then we're going to go back to the Pensions tab, hit the Manage Schemes button once more. So very similar process. This time, we're going to go ahead and edit the scheme. So you'll notice at the minute it's got a from date, but a blank to date showing that it's active. So we'll edit that. All we need to do is enter a date in this left scheme column or row. It's a row, isn't it? There we go. We'll pop in as the 30th of November. Provider's been notified. Click OK. Click yes to that message. So that pops up if you forget, like I did, to untick that primary scheme box in the bottom left. But you'll see there, it's done it for us. Now we have a to date. So we can go ahead, close that, and now you'll see that the pension scheme, it shows as no pension scheme set, and you can hit the save button. So that is the opt-out process for this particular employee. And that's how you would do it manually. So there isn't actually a lot to it when it comes to assessing and assigning. The only drawback is you do tend to need to do this individually based on the fact that a lot of employees may have different join dates, different active membership dates, okay? And that's where the advantage of the pension assessment can come into it, where it does it all for you. But if you do need to do it manually, that's the process how to do it. So we'll go back to the slides now. So that's the opting in and opting out requests. Now we're going to go into what I would arguably say is the fun stuff, which is the calculations. Okay, so as I mentioned, it's important to know how a pension scheme is calculated, but it's equally as important when you're looking to troubleshoot any particular pension issues. If you're concerned the contributions are incorrect, it's good to know how to calculate and, more importantly, what to check in the settings that will base on how that is calculated in order to be able to troubleshoot any problems. So firstly, starting with the things to check before calculating. I called these out earlier. First one, does the scheme use qualifying earnings for pensionable pay? So you'll need to check if that's ticked in the scheme settings. And the second thing, is the scheme deducted before or after tax? Okay, so those are the two key things to check when it comes to calculating pension schemes. Okay, so like I said, if you're concerned contribution amount isn't quite correct, then check these two things, and then you can go ahead and do a manual calculation to see if it is right or not. Qualifying earnings. So again, mentioned this a little earlier. So when a pension scheme uses qualifying earnings, the pensionable pay is calculated using the upper and lower thresholds. So you can see in the legislation settings that we showed a little bit earlier, the lower thresholds there and the upper thresholds. One thing to call out that is unique to this particular tax year that hasn't really been seen previously is the automatic enrolment thresholds used to mirror what the national insurance thresholds were. So it used to be quite easy to remember. This tax year, due to all the changes that we've had with national insurance, the thresholds are different. So make sure you go to the automatic enrollment tab to check those thresholds, okay? Because if you're very much used to be openly honest, I used to be very used to it and just be like, oh, it's the same as the national insurance thresholds, dead easy to remember. It is different this year, so just double check that. So we've got a couple of examples to run you through, and then we're going to give you a shot at running a little bit of a calculation in a moment, but we'll run through these examples first. So this one, the pension, doesn't use qualifying earnings and is deducted before tax. The employee contribution is 5% and the employer is 3%. Gross pay is £2,000. Nice and easy, this one. £2,000 is classed as the pensionable earnings, doesn't use qualifying earnings, so it is in fact the total amount of pay. And then because it's deducted before tax, it's just about getting the 5 and the 3% of the pensionable earnings. And that is it. So the easiest of all the pension calculations is that one. Now we have another one where the pension does use qualifying earnings this time. So the pensions itself does in fact use qualifying earnings and is deducted before tax. So employee contribution again, 5%, employers 3%. We'll be sticking with that percentage amount. This time the gross pay is again £2,000. So there's an additional step you now need to do. You need to have a look at what the lower threshold is. Then you need to deduct that lower earnings threshold, which is £520 monthly this time, from the £2,000, which gives you 1,480. So that's now the pensionable earnings, okay? So rather than the full 2,000 being the pensionable earnings, it's only using qualifying earnings, therefore it's 1,480. So you now need to go ahead and get 5% and 3% of that £1,480, which gives you your contribution amounts. That's all it is in regards to those calculations. So there's just that one additional step if it's using qualifying earnings, but is still deducted before tax. Now, we've put in a little bit of a curveball example here. This time it's the same scenario. So we use qualifying earnings, it's deducted before tax. This time though, the gross pay is £8,000. Now, because the gross pay is higher than the upper earnings threshold, anything over the threshold is not classed as pensionable pay. So when you're using qualifying earnings, you in essence have got a maximum contribution amount. So what you need to do now is instead of the £8,000, you need to go ahead, because that's above the upper earnings. So you need to take that upper earnings amount and deduct the 520, which is the lower earnings amount. So this is a monthly example. So it's the upper earnings minus the lower earnings to get you the difference between the two. And that's now your pensionable pay. So in essence, anyone who uses qualifying earnings has a maximum pensionable pay of $3,669 based on the current thresholds. And again, all you need to do then is take the 5% and 3% of the pensionable earnings. So the additional step is finding out what the pensionable earnings are. Right, we've got one more example for you, and this time it's using qualifying earnings again, and instead it's deducted after tax. So you can see in green, we now have a little additional step to go through. So the gross pay is £2,000 again. So we're going to be doing the qualifying earnings calculation. So we need to deduct the 520 to get the pensionable earnings. And then we need to work out the employee contribution, which is 5%, which gives us £74. However, because that amount is now deducted after tax, we need to reduce this contribution for that tax allowance by a further 20%, which gives us £59.20. That is now the employee contribution. So because the amount is 5%, sometimes it looks, sometimes, all the time, when it looks like this, it comes out as like 4%. So we do get a lot of questions is why is my employee only paying 4% when I've got it set as 5%? The answer is because it's deducted after tax. So you're reducing that 5% by a further 20%. So the 20% of 5 is 1, which leaves you with the 4. Now, hopefully that makes sense so far. You don't have to do this step for the employer. That's just simply a straight 3% of 1,480 based on the fact that they don't get any tax relief. It's just the employee. Just for note as well, in these circumstances, the 20% that you're reducing does get added to the employee's pension pot, but it's done by the provider themselves. Okay, so the employee is still going to get the 5%. It's just not going to look like that on the payslip instead. So that's the after tax situation where you've got an additional step once more. So those are all of the different scenarios that you can run into when it comes to calculating pensions. So it's now time to give you guys a go, if you wish to, of course. Just use the questions section to submit your answer to us. But we've got a scenario once more. So the pension uses qualifying earnings and is deducted before tax. The employee contribution is 5% and the employer contribution is 3%. Employees monthly, and we've got a gross pay of 1,500. Now we've left the thresholds on screen for you, just so you don't have to go looking yourself. Although if you did go looking, that's really good. But if you want to contribute, like I said, got a little screenshot on the top right there of where you need to go. Send your answers in just via the questions. So hit that question mark icon and type your answer in. We'll give it a couple of minutes, as calculators will need to be used unless you are extremely well versed in maths, and then we'll reveal the answers then, and I'll go through and explain it. I'll bring up a calculator even and show you it. But yeah, quick reminder there, pension uses qualifying earnings and is deducted before tax. Employee contribution is 5%, employer contribution is 3%, employees monthly. So what are both the employer and employee contributions coming to? And like I said, get your answers across. Don't worry, it'll be completely anonymous as well. We're not going to be revealing answers, so that is for certain. We are trying to bring a little bit more interactivity to our webinar, so hopefully this is a little feature that you do enjoy. We certainly try and do a bit more of them in the future. And of course, like I said, we will reveal the answer. If you are looking in your program, just as a quick hint, the screenshot you have there is in company in the bottom left, and then legislation. So that gives you your legislation settings. Then of course you have got your an automatic enrollment tab. I can see a lot of answers coming in, so thank you so much for getting involved. As I said, I hope you're enjoying this. Give it a couple seconds more. Still coming through. Just great to see. Thank you for getting involved. And like I said, we shall reveal the answers in a minute. Though I can see time is getting on a little bit. So what we'll do is, I can see them still coming in, which is brilliant, but we'll reveal the answers now. So there is your answer on screen. The employee contribution is £49. The employer contribution is £29.40. Now I am pleased to report that I think from just looking there, everybody got it right, more or less. In fact, yeah, I can see everybody did get it right. So well done, everybody. I probably need to make that a little harder for next time because you're all much smarter than I potentially thought. I thought I was trying to be clever with the qualifying earnings. Clearly, I need to be a lot more trickier for you all. So just to go through it all, we'll have a look at this. So earnings, 1,500. I know you all got it right, but we'll just run through it together anyway. So you all deducted 520, which was the lower earnings threshold. That gave us 980. So then, I don't know how you guys do percentages, by the way, on a calculator, but this is how I do it. So we need the 5% firstly, just that way, £49. Then employer's amount, £29.40. Next time I do it, I'm going to throw in the after tax one and see if you can all remember that one. But yes, that is correct. So well done, everybody. And that pretty much wraps up the main body of today's session, but I would like to just quickly go through some further support before you either shoot off or stick around for any remaining questions. Firstly is our help center. So if you have any questions related to pensions, for example, or anything else, our help center is a great place to go for all the resources that you possibly need. So you can see there on the screenshot, there's actually a pensions section. So you can head on over to have a look at the pension support guide. You also can search our knowledge base. Now, a quick note on the knowledge base searching as well. If you ever encounter an error message, so this is just a little top tip from me, make sure you note down exactly what the error message says and type that into the search bar, and that'll narrow the search down to any articles that are directly related to that particular error. Next, you've got webinars. So like I said, we do them every Thursday at 2 o'clock. So feel free to go ahead and look in the help center to see what webinars we've got coming up. It's a re-enrollment next week, by the way, so it's still pension related. So if anyone's going through their cyclical re-enrollment, Duncan will be taking you through that one next week. So be sure to get on that and have a look, and maybe show off your newfound pension calculation skills. And then, of course, you've got videos, and if you need to speak to anyone, you can do via the get in touch option. And lastly, something that is new, fairly new this year, which is Sage membership. So what is Sage membership? So this is free to any Sage customers. It includes Sage University, where you can go and have a look at any particular Sage payroll courses, or even if you're accounting and you do accounts, there's Sage 50 accounts courses there as well. You can do these in your own time at your own pace as well. And of course, you can get certified, and you can have or Sage certified, and there's certain badges to earn as well. So a bit like a badge of honor. Next, we have Sage City as well, which is included in this. This is an online forum base where you can share hints and tips for yourself, or you can gain hints and tips from others of your peers and colleagues as well on there. So head on over to Sage City to have a look at that. Finally, we have Sage Masterclass. Now, this is various different videos with various different experts on a particular subject. So we run that in seasons. Currently, season 2 is running about unlocking your productivity. So go ahead and have a look at Sage Masterclass. And like I said, this is all included for just being a Sage customer, so free of charge. And that's it. So we'll stick around. I know we've overrun slightly, but we'll stick around for any remaining questions. If you have any, I'll help out Duncan as well. And then what we'll do is I'll be back shortly once we've got all of the questions answered and up and running. If you are leaving us at this time, it's been a great pleasure to see everyone getting involved with the questions specifically as well, and turning up to the webinar. I hope you really enjoyed it today and found it really useful. I do ask as well that it is a bit of an ask, because I know you get asked this probably a lot, but there is a short survey at the end of the session. So when you come to leave it or the session closes, it does mean a lot to both myself and Duncan if you fill that in, because we can't really improve these sessions without that feedback from you guys. Otherwise, we're kind of just guessing a little bit. So I'm going to go on mute for now, help answer any remaining questions, and I'll be back to say goodbye in a minute. Thank you. Okay, everyone, thank you so much again. So Duncan's just finishing off the final question that has come through. So again, it's been an absolute pleasure to see so many of you attend today's webinar, and again, getting involved in that. And just to be completely honest, very, very impressed that everybody got it right. Extremely impressive. Previous sessions, there's been a few trickle through that have been incorrect, but today's been absolutely outstanding. So well done. But again, thank you once more from myself. I hope you're all looking after yourselves out there still, and are keeping warm now the temperatures are starting to drop. But again, it's been an absolute pleasure. Look after yourselves, stay safe, and we'll see you in the next one. Thanks for watching.